CMS INFO System is a 6,300 crore valued company. It operates in the banking automation sector, so and other business segments also. Diverse company, a lot of segments, and pretty big, 6,300 crores. Current price of one share, 384 rupees. Nice return on equity, 17%. Return on capital employed, very nice, 23.7%. Recently speaking, the company's stock has not been performing well. And not been performing well, I'm talking about the last 6 months. Basically, last 6 months. Here you can see in July 2025, 21st July 2025, 534 peak per share, and it has declined severely to 372. Okay, sorry, 384.2 rupees as of latest. So massive decline. What could have led to this decline? I don't know. But the sales, the sales have slowed down majorly. These are the quarterly sales numbers. You can see quarterly results. Black line at the top are sales, and the percentage below is the sales growth year on year. Now, if you go, you can see March, phenomenal sales growth. June, September, really strong double digit, nice sales growth, really nice EBITDA margins, operating profit margins. Here you can see 24, 25%. Those are the operating profit margins. Then December to June, December to June, basically sales growth is almost not to be seen. Almost not to be seen. But keep in mind, look at this black line, this black number, the second black number. These are the operating profits, and you can see despite sales declining, operating profit December 2024, 159 crores, growth of 151 crores despite sales not increasing. Again, in March, 162 crores of operating profit, more than 155 crores recorded 12 months back. Still, growth was shown. And June, you can see 4%, 4.6% sales growth only compared to, well, okay, 4.6% sales growth, and profit actually rose 158 crores from 152 crores. So last few quarters have not been going good, not the worst because profit still rose, and you can see the price has declined significantly. The price to earnings has also declined significantly from 23.5, now standing at around 16.8. The last few days have shown a 7% share price rebound. So, today we're going to analyze a report by CMS INFO Systems. This is a report, the latest report released in September. And first thing to show is the projections, what they're actually projecting. These are the revenue projections by 2030. Now, they're saying that the ATM management solutions and retail and tech business, that is what they have categorized their business as. They're estimating that they can have either two parts. One is when they're growing organically, okay? No acquisition, nothing like that. They expect the business to grow at 12% CAGR and grow their revenue from 2,180 crores in fiscal year 2025 to 3,750 to 3,950 crores in fiscal year 2030. And the retail and the tech business, okay? Basically, retail and tech business involves providing cash transportation services to a lot of retail businesses and a lot of remote monitoring like security, surveillance, and other such services to retail and tech, of course, the monitoring that we discussed earlier, providing those services, ATM management solutions, managing ATMs, as the name suggests, managing ATMs for banks, that is repairing, making sure they're working, and then transporting cash to and away from ATMs. So 58%, they're expecting the percentage of revenue coming from ATM management solutions to decline to 43%, and they want the retail and tech business. That is a new focus for them, a new area of growth for CMS Infosystems. They want this to increase to 53%. Now, this falls on its own. Hold up, the light went away. Yes. Okay. We're back. Now, including inorganic, you can see including inorganic just above me, if they actually make an acquisition, which they may be looking forward to, maybe they're looking at something, they expect the revenue to grow to 4,500 to 4,750 crores by 2030. That is their aspiration. Okay. Then the aim for till 2030. What is the aim? Rule of 35. They want to grow the revenue, as we saw earlier. They can increase it to 4,500 to 4,750 crores, growth of 16% CAGR if they make acquisitions of other companies. But they want to have profit margins or EBITDA margins of 35%, which I don't think they ever have done that. The current EBITDA margins are like 27%. So let's see that. We want to maintain high margin quality and return on capital employed. Strong market consolidation opportunity. Market consolidation, market moving towards more and more organized players, only the big players. So these are the projections. Moving forward, in line with their projections, okay, what okay, the projections by business segment. The ATM management solutions, currently the big dog of this company, they're expecting it to grow from 1,300 crores right now to 2,200 to 2,250 crores the fiscal year 2030, 11% CAGR. Retail solutions and currency logistics, again, transporting cash and all that, cash management for retail companies, 640 crores to 1,050 to 1,100 crores, 11% CAGR. Then the technology and payment solutions, helping, oh sorry, providing technology, providing tech like surveillance and all that. Yeah, remote monitoring system to companies, technology payment solutions, 240 crores to 500, 600 crores, 20% CAGR. So this will be a big growth driver which will push them. They're hoping to be pushed to 12% CAGR growth by 2030. Let's see if they can achieve this or not. So these are the estimates and all of that. We just covered it. Now, what has been causing the current struggles? Okay, the current struggles. If you're wondering what the company actually does, there is a video already made on the channel about CMS Info Systems. Check that out. Okay, what is causing the slower momentum? They have mentioned macro and industry issues. First is tepid consumption. So consumption has not been big thing, big. So tepid consumption not really going that big these days. Consumption by people. This is impacting 18 transactions plus retail churn and collection volumes.